So thank you for coming. Thank you again, Victoria, for putting it all together. So obviously, first of all, I wanted to ask how many of you heard of Bitcoin and blockchain? Probably everyone. ICO? Yeah. And IEO? Nope. Okay, that's good. So that's just a quick overview of what we'll do today. It's basically, first of all, what an IPO is, so in the traditional sense, and then we'll go over into ICO and IEO. So those are the alternatives to the IPO. The crypto markets, what are the main drivers, and then we're going to speak about the retail crypto investor, so the traditional retail crypto investor, some information about general consumer sentiment, and then just a summary of everything. So yeah, so about me, basically, in 2015, I first got into Bitcoin and cryptocurrencies and the whole research aspect, and then in 2016, so I studied in London, so I got the chance to explore the topic further in the dissertation. So I wrote that about blockchain and its impact in financial institutions. So I interviewed basically some big banks, some big consultancies, and obviously back then it was still a bit of a, let's say, just oversight. So they were getting together teams, so development was just starting. And then, like I said, so House Nakamoto, store consulting manager, is basically, the concept there is it's physical store locations with Bitcoin ATMs. And the whole purpose there is to help people get started in cryptocurrencies. So basically, to understand what is Bitcoin, what is blockchain, how can I download a wallet, how can I buy cryptocurrencies generally. And then in 2018, with a friend of mine, we co-founded something called Crypto Talent, which is a recruitment platform that helps people that want to get involved into blockchain or crypto projects to have an opportunity, to find work. Mainly now what I've been doing is Max on the Block, which is just my channel, more of a hobby, but I do take it serious. And that was just because I was fed up with a lot of misinformation. So I just post a lot of videos, do some events, do some talks, share some of my experiences and insights, maybe. Yeah, so essentially an IPO, as we know it, is just when a private company, usually a corporate, wants to issue its shares publicly. They do that via stock issuance, right? And then they could be listed on some kind of exchange, whether that's the New York Exchange, London Stock Exchange, you name it, NASDAQ. But obviously this is more of a traditional concept, right? So this does not apply for crypto projects and blockchain startups. So that's why just a small overview of IPOs. Next slide, please. And just a quick way of why it's not really the best option. The IPO is because, first of all, and by the time you file and by the time you actually go public, there's a 6 to 9 month time lag, let's say, for example. And the problem is that within that time lag, imagine by the time when you're filing, the company is doing well, all is good, but by the time you actually are about to launch and go public, something hits the company internally, and that obviously causes a lot of confusion. Sometimes they cancel the IPO, or they have to put a price way down than they were expecting. Obviously it's expensive, so maintaining a public company is ongoing. You've got the attorney fees, accounting, marketing fees, and you've obviously got the risk. First of all, that whatever price you decide to launch as an IPO, and when you go public, the market might not accept that price, So if it doesn't accept the price, you're obviously in a worse position, your reputation might be damaged, and also loss of control in terms of voting and ownership shares. You're selling a lot of the company, and so the founders might actually be in a worse position than they were before. So the alternative is something called ICO. That's basically what most of the time was going on between 2015 until 2018. The first original idea occurred in 2012. And basically what it is called initial coin offering. And the idea is that you create digital tokens and you distribute them using the blockchain technology. That's the fastest way for companies to fundraise in, let's say, in the blockchain space. And the way is just that it is a revolution as we know it, because you don't have underwriters, you don't have intermediaries. So if you as a project want to say, okay, we want to launch, let's say in 2 to 4 months, and provide our tokens online, that's basically the concept. And it's unlimited reach in global crowd. What I mean here is that there's no discrimination. You don't have to have a bank account or a stockbroker account. You can participate with $50, $500, or $50,000, it's up to you. It's obviously cost and time effective because ICO on average can launch within 2 to 4 months, depending on the progress. And it's obviously a decentralized way of fundraising because there are no intermediaries. So if I'm the founder of a project, you can directly access our platform and buy the tokens immediately. So you don't have to use a broker. There's no additional costs incurred, essentially. Moving on, next slide is basically just a few key characteristics that an ICO needs to have. First of all is the white paper. So whenever a project thinks about launching a new project, a new coin, think of the white paper as something like the MVP, so the minimum viable product. And what that does is it underlines the purpose of why they're using blockchain technology and what problem they're trying to solve with that white paper. It obviously gets technical because the whole idea is for anyone that wants to invest potentially, they get the first insight into what's the purpose, how we're going to use the technology, and what are we going to solve. The next thing is obviously the roadmap, which is basically giving you a full timeline of, okay, this is, let's say, the time we release the white paper, all the steps, all the way until the final public round of sale. So that's basically just showing everyone, all the crowd. So let's say this quarter, 2017, this is our goal, etc., and then it keeps moving that way. And eventually, the whole purpose of the roadmap is just to say, okay, how far off were we? How accurate were our predictions? All that stuff. And obviously, then there's the private and the public sale, which is basically just saying the initial round of sales, which is a private one. So here they obviously set a more realistic target. Once they meet that target, then they go public, and anyone can buy the coin. And this might be several series, so it might be within 3 months, 6 months, or even a year. So that just depends on the project. But yeah, so this is basically just a picture from CoinDesk, and it just shows you, so in 2017, the amount raised only by ICOs was at $5.7 billion. And in 2018, obviously it rose, so we were above $6.2 billion. But the number of ICOs shrank actually. So in 2017, we had almost 350 projects, and then we fell by 41% in 2018. So I'll explain why that is. Basically, creates opportunity. What I mean here is that, yes, a lot of good projects have the opportunity to gain access and quick and easy access to potential investors. The problem is at the same time, it's something like a double-edged sword. Why? Because while it creates opportunities for good projects, it creates opportunities for scammers that basically can access the same investors and, let's say, take $50 million, $20 million, whatever amount it is, from the crowd and disappear, right? And that's why it does create opportunities, but you have to think of it from both sides. So that's what I mean. The disadvantages of an ICO is that the legitimacy, first of all. CoinDesk is a pretty big news and PR agency basically in the blockchain space. And they were saying that around 50% of ICOs were actually out of business after 5 months, which just shows you how dangerous it can be. The scam and exit, basically, like I said, double-edged sword. 2 coins combined took about $27 million from public investors and disappeared. So that's the issue with ICOs, is there's no accountability. They're not regulated, which means you can't point fingers at a specific person, for example. And because of that unregulated market, it's obviously an incentive for people like that to hop on and take $10–15 million and disappear. Next is basically, so before I go into IEO, there's one more sample which is called STO, which is called Security Token Offering. And there are a few examples of that. And what it does is, this time around, the token issuers, they do have, basically they're accountable. So it's a compliant kind of token issuing, and there's usually something they're backed to, whether that's an ETF, a real estate, some kind of fund, something where it's physically backed to it, but that's still also emerging. The main trend 2019 is the IEO, and initial exchange offering is just that instead of each project individually offering their shares to the public, what the exchange does this time around is the exchange itself issues the tokens on its platform. So this time around, if you are, let's say, signed up to a certain exchange, whenever there's a token release on that exchange, your IEO, you have full access to that token. So you don't have to separately each time access a platform where you can buy a certain ICO. The IEO just basically makes it a lot easier because it's all on one platform. And what I mean here is, so better opportunities basically just means because the exchange is the one that's actually issuing the launch, they're obviously going to be a lot more responsible when they're, let's say, accepting coins, because of obviously there's a reputational damage. So if that coin is not legit, the exchange is not going to risk its reputation just for one project. Second thing is less noise, which just means generally there's a lot less IEOs, which just means that less people are going to be confused by the whole noise and the whole media surrounding the hype, so that obviously helps. One more thing is that it's immediately tradable because it's already listed on the exchange. And yeah?
Sorry to interrupt you.
Yeah.
It's written decision making is much easier.
Yeah.
How is that? Can you explain?
Sure. So basically imagine if you have $1,000 and you want to invest, but during the ICO stage, if there's over 500 projects, you have to actually, look and delve into a few projects a lot deeper than with IEO. So let's say there's only been about 30 IEOs. So you yourself can obviously decide for yourself which ones to invest into, but the selection is small, which obviously makes, let's say, decision making easier in the sense of selection more than deciding where to invest. That's a good question, because in any case, even if it's listed on the exchange, what you have to look at is how trustworthy is the exchange itself. So basically that was the last point, is the exchange's legitimacy. So even though it's an IEO and the exchange is risking its reputation for a coin, in some cases, if the project pays enough, the exchange will take that money and launch that token, And the problem also is that obviously a lot of exchanges, they can fake volumes, and they are always prone to hacks, because they're centralized, the possibility of a hack is always there. So basically that was a bit about ICOs and IEOs, so the way we raise money. Now I just wanted to speak a little about the market itself. So what drives the market, what kind of factors should you consider? And basically there's a few things from my side. First of all, adoption. Adoption equals growth, and with the news of, let's say, Facebook, the Libra coin, if you've heard of that, they obviously have access to 2 billion people's accounts, information, data, everything. So if they launch a cryptocurrency, there are obviously 2 billion people automatically have access to a cryptocurrency that they can use on the daily. Furthermore, let's say Japan accepts Bitcoin as a means of payment, right? So in over 3,000 retail stores, you can go to Japan, buy yourself whatever you want from the store with Bitcoin, right? All of this obviously drives adoption and growth because of that. Next is obviously trade volume. So what I mean here is that people are obviously speculating on cryptocurrencies, they're investing short and long term, but generally the volatility itself is not a bad thing. It's actually good because it shows there's interest and movement. The third thing is institutional movement. So here, think about Fidelity Investments. So they have about 7 trillion assets under management, one of the biggest asset management firms in the world, has opened up a crypto desk, and they're hiring a team of 30 experts to basically handle client money for cryptos. Also, even some people that I know, they've left they've left BlackRock or Goldman Sachs. So from big shop to small shop, they've opened their own crypto fund, and they're basically investing into the ecosystem, which is the next point, which is startup ecosystem, in the sense that there is around a $300 billion market right now for startups in blockchain, and this is obviously driving the growth. But obviously the startup ecosystem is something where, like I said, with the ICOs, you have to be selective, so you can't just go for all of them. Make your decisions, do your research, and the last thing is just limited supply. For example, with Bitcoin, right, there's a set number, which is 21 million. Once all Bitcoin are mined, there's no more, and obviously only 21 million will be in circulation. So the retail crypto investor, from my side, as Vegan mentioned, so I've worked in a Bitcoin retail store, the first one actually in the world in Vienna, and on the daily, this is something I would see, is obviously how people react to the price, when do they want to buy Bitcoin, and obviously the consumer mentality to start off is buy high and sell low. I don't know why that is, but people like to get in when the price is really booming. So let's say once we saw about at $8,000 per Bitcoin, people start to come in, so we would have maybe 20 to 30 visitors a day. Once we got to 10, 12,000, we would start getting about 80 to 100 visitors a day. And after 15,000, 150, 200 people on average every day. So as soon as we'd open, people already would be waiting outside all the way until the closing hours, and people would be buying non-stop. The problem with the consumer mentality part is that as soon as the price is high, everyone starts reporting about Bitcoin, right? Any kind of news and media outlet is covering that story because obviously the attention is there. And obviously that causes an issue because the second thing is emotional attachment. So what we saw a lot as well is that people were investing more money than they're comfortable losing. Cryptocurrencies are very volatile and they're very risky, right? So you should only be putting in money that you know that you're comfortable with seeing, let's say, go down to zero even. But people will put in a lot more money, let's say a salary, which they have to live off. They still put that in because they think, okay, I'll make some quick money. But obviously, as soon as that goes down, they need to cash out because they can't risk, they can't afford to lose that money. Which is obviously the next point, which is uneducated or inexperienced traders. Just because, the crypto market is not that regulated, it doesn't mean that anyone can start trading Bitcoin and make money, The stock market has a very, let's say hedge funds or private equity firms have a very strict way of handling money and risk. And people just blindly went into cryptocurrencies, especially Bitcoin. And obviously, that's why we had a boom and bust cycle, just because at the point where people, the early investors made their money, let's say between $15,000 to $20,000, that's when they sold, and the people on the other side, so the retail investors, would buy at those high prices and provide the liquidity, so the early investors got out with a profit, So essentially, retail investors were buying the profits from the early investors, essentially. So that's why I always say avoid the noise. What I mean here is that news agencies, PR outlets, whatnot, they're not there to give you the right information or educate you. They're there to get clicks, to gain traction, and obviously get attention, because what they do, they sell ads, right? And they need clicks and viewership to sell those ads and make money. And that's why I always avoid the noise, because although the news gives you some information, you have to interpret it the right way. Don't believe everything that's said just because their objective is different to yours. It's not aligned. And those are basically just 3 simple terms that I always like to speak about is FUD, fear, uncertainty, and doubt. This always happens when the market is at a sell-off, and this is basically just a backward spiral because people are panicking. The news is going wild as well and saying, guys, sell Bitcoin, it's not worth it, it's worthless. Then you have FOMO, which is basically fear of missing out. So let's say a normal retail average investor buys Ethereum at $100. Ethereum drops to $80. In that moment, he all panics and sells. But as soon as it hits the $80, all of a sudden goes up back to 150. He's scared of missing out, so he jumps back into the train at 150. And that's basically just textbook FOMO. And this is probably my favorite, DYOR, do your own research. Always do your own research. Don't listen to anyone. Don't trade based on an article. Make your own decisions, make your own framework if you have to, and go with that. This is basically just a chart of, this was January 2017, and this is basically the 1st of June 2018, so this is an 18-month cycle. And obviously what we can see here, so all the way until about 3rd of October, we went from about $1,000 to $5,000. And then from the 1st of November until end of December, so about 6 to 7 weeks, we went from $5,000 to $20,000. That's not sustainable, obviously. Then obviously you do have the sell-off, right? So from about early January until, let's say, mid-February, we dropped from $20,000 to about $7,000. Again, this is all just hyperbolic because people were buying non-stop. There were no corrections in the market, which was a clear sign that something is going wrong, something is not right in the market. And obviously the way it sells off as well is the same where I was saying that people at 10 or 15,000 that were buying into Bitcoin at that time were investing money that they can't afford to lose. So as soon as it did go down, right, it just dropped. So it dropped immediately because of the rate of selling was insane, The way people came and bought at the time where it was going up, that's at the same rate they came to start selling, It was pretty much identical at one point, The way people were panicking and buying, or the way people were panicking and selling. So one thing I like to speak about is basically an alternative perspective to anything that the media outlets say or about the price, and that is basically just the yearly lows of Bitcoin. So 2012, $4, and then 2016, let's say 365, and 2018, $3,200. So anyone that tells you, Bitcoin is down and up, or it's not growing, or it's dropped by this amount, I like to show them the yearly lows, just so you can see for yourself that the growth is there, it's just long term. And basically, just to summarize, what I'd always like to say is that ICO and IEO, they're great concepts. The problem is just that they're badly executed in the sense that it's not really about the concept more than the people as well. Because the people that do launch useless and projects of no value, it's actually more based on the investor. So if the investor sees that project, thinks it's worthy investment and goes for it, it's their own fault, So it's basically that the community itself puts the trust or the money into those projects, right? So although the concept is great, it's more about poor execution from the community in that sense. Something as well I'd say is just that crypto trading is not for everyone. So understand what kind of investor you are. Do you want to do day trading, intraweek trading, or just hold it out for 2 to 5 years, let's say? And lastly, of course, do your own due diligence. That just means don't trust all opportunities. Look for the right ones, do your own research, and obviously, at the end of the day, you take the blame if you lose money, no one else is going to take it for you. That's why do your own research, make sure that you know what you're putting your money into, and know the consequences as well. That's just how you can get in touch with me. That's just my social media channels, my email, my telephone number. Thank you for listening.
Asni.